Hello, everyone, and happy 2022. This is going to be a little bit of a different video. I thought we would talk about something that is probably very relevant, but something that's probably not often spoken about, which is going to be human psychology in crypto. Fear, FOMO, euphoria, how that plays into your actions, how that plays into how you trade, when you buy, when you sell, how you take profit, and just kind of give you maybe some suggestions on how to combat this so that you're not always playing defense, but rather you're playing offense. And we're also going to look at kind of the market in general. We don't look at charts really much on this channel, but the DAOs are bleeding out pretty bad. I just wanted to talk about that for a minute and just kind of talk about the market sentiment in general, and then talk about how the human psychology element that we'll look at first actually plays into that. So let's get into it. So if we look at the market, everyone's saying, "Oh no, the market's crashing, it's falling down, everything. This is it, it's over." Crypto had its run, and now it's all gone, and I'll have to wait years for this to recover. And oh no, OHM is $110, and time is 1100, and Hector Dow is actually up 30%. So it's a bad example, but it was down as low as $37 a day ago. So kind of panic, right? Panic, fear, maybe regret, things like that are all hitting people. So I thought, hey, why don't we talk about that? Because that actually plays a lot into, I think, how people evaluate projects as well. Some of these same elements, kind of give you my opinion, and I'll just share how I kind of manage my emotions as well. We look at this a lot. There's a reason I show this to you. I share this to try to, share what I think expectations should be, in my opinion. And everybody pictures this on the left. This is how it's going to go. Everything's just going to go up in a green candle. You're never going to have a pullback. Everything's going to be great. You're going to put in $1,000 today, and tomorrow will be worth $100,000. And a month from then, it'll be worth $3 million. And then 30 days after you put that $1,000 in, you'll be able to retire. But when all these pullbacks and these things happen, all of a sudden, it's frightening because people haven't managed their expectations, and because their expectations haven't been managed properly, it's of course very difficult to manage emotions because they're very tied together, as I'm going to show you here in a minute. So, you're buying at the bottom of this little graph here, and it goes up, and you get excited because what you were picturing on the left is actually playing out. But then when it actually goes down, you're like, well, wait a minute, I don't know what to do. Your brain is, your thinking and your emotions don't know how to play well together because the expectation was rocket ships, and then all of a sudden bloody knives come out. I always say we go from rocket ships to bloody knives in an instant as soon as red candles show up. And, maximalism also plays a part in that. But the point is that it's fine to visualize this, because I always say put your energy where you want your results to come from. But keep in mind, this is what you should expect, right? And that, I just think, is a very healthy way of looking at things, that we should visualize success. We should visualize what we want our goals to, when we achieve those goals, what we want that to look like, and all that kind of stuff. But, you have to be realistic, and you have to set your expectations appropriately. And that goes for any project that you think is the greatest thing since sliced bread. I don't care what it is. You can be a maximalist, but at the end of the day, nothing's perfect. Nothing goes straight up. You're going to have difficulties. I can tell you, in business, you have difficulties, setbacks, unexpected things happen that you're reacting to. You're constantly putting out fires, and you're trying to grow. And this is really what business looks like, but this is what anything in life looks like. You set goals, and you want to exceed those goals, and you want to do visualization and all these different type of tactics, and that's what the left is. But in reality, the right is what you should be expecting, and this is really going to tie in. So we're going to look at kind of the psychology behind this, because it is a little bit fascinating. We're going to look at fear and FOMO. FOMO you can also replace with euphoria if you'd like. But FOMO is kind of its own specific thing. Fear of missing out, where people, they see a price go up and, they think it's just going to go up forever, like the left, something is a new project or it's a new hot thing on Twitter or whatever. And they think in their mind that, oh, well, if I don't buy it, like, I'm never going to get another opportunity like this again, and this could be the one. And if I don't do it, all of a sudden my life is going to be ruined because I'm going to look back and I'm going to regret it. And, this could be the one thing that's going to change my life. And that sounds extremely unrealistic, but that's what goes through most people's minds when they, experience FOMO. So we're going to talk about that, and then we're going to talk about the fear. So the FOMO, you can say, is a little bit more on the left, and the fear is a little bit more on the right when you have these downturns. And I want to talk about both of these because it goes into not just buying and selling and trading and things like that, but it also goes into evaluating projects. I think a lot of the same maximalist mindset oftentimes stops people from thinking rationally and logically about a project. They see announcements, and the announcement is like good news, even though they really couldn't explain what the announcement even said, for example. We're going to look at that, but let's go ahead and hop into this really quick. So the first thing is fear. So let's talk about that for a minute, because that's kind of what the market's in. It's what the market's been in for, month and a half now, basically. What happens in the brain when we feel fear? And this was written by, just so you know, 2 assistant professors of psychiatry at Wayne State University. This is a long article, but kind of 80-20 here that I want us to look at is right here. There's something that I thought really jumped out that we should go over. I hate when people read a long article and you can read it yourself, so I'm just going to read portions of this. So these are written by the 2 psychiatrists, assistant professors, and they say, we are psychiatrists who treat fear and study its neurobiology. Our studies and clinical interactions, as well as those of others, suggest that a major factor in how we experience fear has to do with the context. When our thinking brain, quote, gives feedback to our, quote, emotional brain, we perceive ourselves as being in a safe space. We can then quickly shift the way we experience that high arousal state, going from one of fear to one of enjoyment or excitement. For example, this is a great example, I think, right here on that point. When you enter a haunted house during Halloween season, for example, anticipating, and that's a key word to keep in mind, anticipating a ghoul jumping out at you and knowing it isn't really a threat, you're able to quickly relabel the experience. Contrast that with a situation where you're walking in a dark alley at night and a stranger begins chasing you. Both your emotional and thinking areas of the brain would be in agreement that the situation is dangerous and it's time to flee. Okay, and it goes into how this all happens and so on. It comes back to that one point. It says basically our thinking circuitry of brain reassures our emotional areas that we are in fact okay in this one specific instance. So you have kind of 2 situations here. You have the thinking part and the emotional part. Ideally, what you want is for the thinking part to reassure your emotional part that everything is okay. Okay? So what I kind of got out of this is something that's kind of interesting, which is expectations. If you're in a haunted house, you're kind of expecting someone to jump out at you, right? Whereas if you're down a dark alley, you're not expecting someone to jump out at you, is kind of the point. So in that moment, you're reacting because it's not part of your expectation. Okay, so if the expectation is that someone's going to chase me in this alley, you probably would react similar, but you'd react definitely different, I think, than if you were caught off guard. And being caught off guard And not having expectation and the context of it is all very important, because we clearly have a thinking and an emotional side. And I think what you want, ideally, is you want the thinking to dictate to the emotions, not the other way around. The moment you get the other way around, your emotions are now dictating your thinking. And that's probably not even, psychologically correct, but it's just kind of me making like, an example. Because actually, I think your emotional and thinking parts of your brain light up or shut down more depending on the situation. And I think this is part of it. And I'll show you another part of it. What part of the brain controls emotions? So these are the areas of the brain that activate more so when emotions are higher than your kind of logical, critical thinking skills. Let's just say you're invested in I don't know, OHM. Okay, you bought it at, I don't know, $1,200. I know people that did. I think even in the example of my video when I showed how to buy it, it was like 900 or something like that. You see it suddenly crash down, even if it's over time. You start to not even look at the chart anymore because you're so frustrated and you're so afraid, and it kind of triggers all these emotions that you don't want. You don't even look at it, but you kind of have to eventually, right? So you start looking at it again, and God forbid if you do it before bed, because you'll never sleep. Okay. You might have experienced an increase in heart rate, an increase in breathing rate, an increase in your blood sugar. Well, you wouldn't have probably known that. You might even perspire, fight or flight response, right? This is all part of fear. And when your emotions are taking over, it's because your expectations are not set appropriately. So I'm talking all about expectations here. Yeah, you might still experience these, but a lot of these are normal human reactions, physiological reactions, and that's fine. But the overall expectation shouldn't change. Now couple that, or rather contrast that, I should say, with the parts of your brain associated with thinking as opposed to emotions. So you have all of these areas of prefrontal cortex, a temporal lobe, etc., that are all part of your critical thinking. So these are areas that are going to light up more and be far more active when you're exercising critical thinking, and might be not quite as active if you're more in a fight or flight, emotional, fear-based sort of response. So let's talk about FOMO for a minute. Here's what happens in your brain when you're experiencing FOMO, fear of missing out. Now, it affects all people at different times, okay? Social media can make this far worse, as we could probably expect. Constantly clicking notifications, refresh. You're afraid you're going to miss something. It's a fear of missing. It's a different kind of FOMO. We think of FOMO in crypto as, oh, the price is going up, I got to get in. That's one version of it. It's not the only version of it. But it's very interesting. I'm going to link all these articles. You can read these. They're very fascinating. So you'll find that there's certain characteristics that kind of make FOMO worse. And there's certain people that are more prone to it. And it does get better with age. This was the most fascinating to me. Results showed how FOMO was highest later on in the day and near the end of the week. Okay. This was a study being done, by the way. The students who studied and worked more and performed more obligatory tasks reported having greater FOMO. So people who are working really hard. So maybe if you're the kind of person that's working really hard at work all day and you're buying crypto at the same time and you're stressed out, maybe not the best time to be buying and selling. Apparently, this has something to do with it. The later in the day and the end of the week was an interesting one to me because it made me think of something, and it was once told to me, and I don't know if this is accurate, but it kind of makes a little sense to me, which is that there is a couple times in the day that you were at your weakest, just mentally, with self-control, emotionally, etc. And it's when you're hungry, when you're tired, or when you're lonely. I don't know if that's true, but it actually makes sense. So I'm not quoting a scientific fact. This something that was once told to me, and it does make sense if it's true, because those are, well, a couple of them are physical, and one is an emotional thing that they factor into you being at your weakest point. And they did say FOMO is associated with fatigue, stress, and trouble sleeping. So imagine you can't sleep and you get up and you start buying things. Maybe not the best time to do that, but I've actually heard, and there are stories online you can look up for yourself, that people would actually, in their sleep, they're dreaming, and they actually end up buying something on their phone next to them. And they find out in the morning they bought something, they don't remember buying it. There's this weird, you can't sleep, so you wake up, you buy something. In that person's instance, they were dreaming, but I think it's just such a common thing in the middle of the night to do, you just kind of do it. So fatigue is one of the things I was mentioning. You're tired, trouble sleeping. You know, I don't know this for a fact, but people with trouble sleeping might also be lonely. Other people are either asleep or they're not around them. And stress, I don't think that has anything to do with being hungry. But the point is FOMO tends to be associated with certain things, certain times of the day. Later on in the day, you're at your weakest. You're more tired. Later on in the week, you're at your weakest. You're more tired. There's some sort of mental shift that resets on like a Monday or a Sunday. And, you know, there was some other interesting things in here. Like I said, they felt like, you know, negative feelings like boredom and loneliness had an impact on their well-being. FOMO contributes to a person's dissatisfaction with their own social lives, so it kind of all is a self-feeding mechanism, if you will. This is interesting. So how do we sum all this up? What am I trying to get at here? It's interesting to see how your brain reacts to things, but kind of what I'm getting at here is, in my opinion, I'm not a psychologist, so, you know, get your own advice from a professional. I'm just giving you my opinion of what I do. I have expectations, right? And those expectations are a certain way that when I buy something, we go back to this real quick here. My expectation is on the right. My expectation has been set. It's far more difficult, in my opinion, to change your expectation after you've set it. It can be done, but it's more difficult, especially if you're like this maximalist person. You have this thinking part of your brain and this emotional part of your brain, and ideally you want the thinking to kind of dictate the emotions, not the other way around. You don't want your emotions dictating your thinking. You know, the maximalism mindset. The maximalism mindset is the emotions take over, and no matter what your project does or doesn't do, and no matter what the competitor project does or doesn't do, the project that you're invested in, gosh darn it, is the greatest thing ever. And it doesn't matter. Even though logically, it'd be, for example, this is an example, and this is not picking on any certain crypto. If you're an XRP maximalist, which I'm not, I own XRP, but I'm not a maximalist of anything, at least I try not to be. And all of a sudden you hear Ethereum finds a way to fix their gas fees, and it actually works. The emotional part, maximalism, would be, oh, that's stupid, it doesn't work, and, you know, give all sorts of things, just attacking the project, but not really attacking the solution, or not really even speaking of the specific solution. It's just that it's a competitor, so it must be stupid, right? That's the non-logic part of your brain kicking in. Without mentioning other projects, that certainly is, I'd say, a good chunk of crypto Twitter, is it not? You know, there's very little logic. There's very few people, I should say, that can actually research and look at projects independently and non-biased and say, hey, yeah, if something is good, it's good. And if something later that you thought was originally good is bad, it's now bad. And that's being very open and reasonable, I think. And if a project that maybe you trashed has fixed something, then admit that they fixed something. Don't hate them just because you originally did. I mean, it's okay to change your opinion. That's not a problem. But, you know, aside from that, setting your expectations of a project, you know, there is no such thing as an infinite progression of green candles, just like there is no such thing as an infinite progression of red candles. And setting your expectations, this is something that I want to show you really quick here. Okay, so we're going to look at a couple charts here. I just kind of want to make a point. I'm going to show you a couple charts. I'm not going to tell you what asset this is. You probably could figure it out. I'll try to hide it on the screen, but I'm I'm going to show you this chart. Now, if you were to look at a chart like this, what would you think? This is going back from November 9th, 2021 to today, which is January 19th, 2022. So about 2.5 months. You looked at a chart like this. Would a chart like this instill fear, FOMO, or none of the above? You're just kind of indifferent. That's a lot of red candles. And I'm not going to draw trend lines or anything like that, but you know, that's a long way down. Now, keeping this chart in mind, does this chart instill fear, FOMO, or none of the above? You're just basically indifferent. Well, if you haven't figured it out by now, this is the Bitcoin chart, obviously. I think you probably know that. If you look at this entire chart, we, in the first one, were right here, all the way, right about here, right here. Again, if I zoom out, and I can zoom out even more. Now there's a chart like this. If you saw a chart like this, would this instill fear or FOMO or none of the above? Just that you're looking at the chart. Forget that it's Bitcoin. Doesn't matter that it's Bitcoin. This chart is very different than this chart. However, they're the same chart. So what's the difference? Well, the difference is expectations, right? If you looked at a chart like this and you kind of saw the entire picture, that's very different than looking at a chart like this, where you're literally zooming in to a certain time frame. So it's keeping the entire, it's not missing the forest for the trees, is what I'm trying to say here. And that's all about expectations. You know, like I said, there's no such thing as an infinite progression of green or red candles. It doesn't exist. Everything that goes up has to come down, and everything that goes down has to come up. And, you know, I set my expectations appropriately. You know, there's a lot of people who, there's this big argument of, for example, people who are technical analysts, which I am not, will say fundamentals don't matter, they mean nothing, it's all about charts. And then there's people who either they understand or don't understand technicals, but they're more focused on fundamentals, and they'll say, no, it's all about fundamentals, charts are basically pointless. And I've always taken the middle ground position. I say that fundamentals and charts matter, personally. I mean, they both matter. You can't have one without the other. You know, I'm more fundamentals personally myself. You know, so I make my decisions personally with 80-20 rule in mind. I make, when I'm deciding to buy or sell something, it's 80% fundamentals and 20% the chart. Whereas if you're a chart person, 80% of it, your decision making is your charting, and only 20% is really based on fundamentals. And that's okay. There's nothing wrong with either one. But what I would say is this. So I tell you what, why don't we go look at OHM for a minute? Because I know everybody's freaking out about the DAOs and OHM, and everything we've talked about kind of psychologically fits into what I'm going to, you know, go into here about the DAOs. All the DAOs are bleeding out. Everybody's freaking out. Oh my gosh, you know, everybody's kicking dirt on OHM now. It's over. It's done with. The project had its day, and you know, it's never coming back now. And it's at $109, and I actually saw it as low as $99, and it's all over and done with. It had its run, and there's been too many copies, and they're on other blockchains, and yada yada. You're making that assumption, or that, you know, conjecture, I should say, based on the chart, not based on fundamentals. And you're only making that assumption because of red candles, not because of green candles. If they were green candles, you'd have the opposite opinion, which means that that's not coming from logic, that's coming from emotion. Okay, because we've been taught that red is bad, green is good. No matter what the fundamentals are, that's all that matters. Project is garbage if there's red candles. If it's green candles, it's the best thing ever. You look at a chart like this and you're like, what is going on here? And there was a lot of liquidations that took place. One thing I do not like about Wonderland, Hector DAO, OHM, and many of the other DAOs is that they're leverage platforms with Abracadabra, Rari Capital. People continuously use leverage, you know, apparently 8,000%. I'm sorry, I should say between 5,000 and 50,000, 80,000%, whatever Wonderland is, isn't good enough. They actually have to use leverage on top of that, which I don't understand. and then they constantly get liquidated over and over and over again. I do understand some people that had a technical glitch and they weren't able to get out of their positions, but the point is they were leveraged to begin with. And people constantly get liquidated, so it creates this continuous downward spiral over and over and over again. But because of the red candles, all of a sudden OHM is finished, which doesn't really make any sense, because if there were green candles, let's say, for example, right, I think it was right here. Yeah, right here when we were at the bottom of that head and shoulders that I showed in my last video from, I think it was October. No, it would have been August. Actually, I made my video a little later. I think I made my video somewhere around here. But let's say you were looking at this at the bottom and it went, all the way from the all-time high of 14, almost 1,500, all the way down to, where were we here? We whipped it down to 225. And oh my gosh, it's over. The OHM's done. It's finished. It had its heyday. And then all of a sudden it does this move where it blasts up to about $1,365. Would your opinion have changed between those two areas of 225 and 1365? Emotionally, if you're operating off of emotions, it would have. You'd have said, oh gosh, you would have seen it go up and come down. See, I told you it's over. Then it goes up again, and you're like, oh, I thought this was a nothing burger. And it goes up and comes down, and you're laughing again, and it goes up, and you're thinking, all this whole time as it goes up, you're thinking, I could have made this much money, I could have made this much money, I could have made more here, could have made more here, and then you buy right here at the top. Because truly, if the opinion was that it was garbage at 225, it would also be garbage at 1365, would it not? That's what I'm talking about, expectations. If the expectation in your mind, fundamentally, is that OHM is a giant nothing burger, and it's just a trend that's going to die, then you wouldn't have bought at any point, because it wouldn't have mattered to you. Without mentioning names, because I won't, I had people who first trashed OHM, saying, oh, it's garbage, it's this, it's that. And that was on the way up to here. Let me see, this was September. I made my video like right around, I think it was like right around here. I had people trashing it right around here. You know what they ended up buying? Up here, right around here. Went up a little bit, then it came crashing down. Then they're like, I should have just stuck to nodes. I know people that this happened, and they're people you would know of, which I will not mention because, I just won't. But that's being emotional. Set your expectations. Do your research, because I think we need to get to the point where we start to detach ourselves from the USD or whatever currency you live in your country value and the token itself. So you have fundamentals and then you have pricing. And what I think we need to do is kind of separate those two to a degree. You need to get good entry points. You need to know when to take profits, all that fun stuff. But at the end of the day, what I will say is this. Let me zoom out here for a minute. Okay. And if you don't know the answer to this question, go back and watch my video that I did, the OHM kind of deep dive video. Know the fundamentals of what OHM and Olympus, and not just, it could be Wonderland, it can be Hector DAO, whatever. Know what their goals are, know what they're trying to achieve. I would ask the question of this, looking at the entire chart of OHM, has anything changed fundamentally in the entire chart? In other words, when it launched at, what is this, I don't know, $145, and it went all the way up to, I don't know, it was like $14.85, and it's come all the way back down to $166, and came all the way back up to $656, and came back down to $225, and went up to $13.65, and it's come all the way back down to $109, and whipped it down to as low as $99. Has anything changed fundamentally? If the answer is no, and you bought because you did your research, okay, truthfully, not, going on, this is, let me tell you, most people, this is the extent of the research. I'm not here to bash. I'm just telling you what I know. Most people's, the extent of their research, this is the 80-20 rule in reverse. This is how 80% of people perform their research. They see a project, they go to CoinGecko, they search for it, they click the token, whether it's the actual token or not, Okay, they read the supply, they click the website, they browse the website for about 10, 15 seconds, and they've done their research. They might glance at the white paper. They're usually looking for pictures and graphs and charts. That's the extent of their research. They're done. They already know if it's good or bad. What I'm saying is do real research. That's a whole video in of itself. Only 20% of the actual crypto investors, I would argue, actually do real research, true research. Talk to the team, know the use case, know the utility, know the roadmap, know the tokenomics, know the solution it's trying to solve, know all that stuff. Actually dive in and understand it, rather than writing it off just because it's something that you don't totally understand and you're basically too lazy to do research. Okay, that's my rant. If you did your research and you did proper research and you bought up here, I know some people that did, and it's down here, what difference does the price make? In other words, would you not buy more here? I'm not saying you should. I probably am going to. But the point I'm trying to make is we need to start to detach ourselves, I think, from the price a little bit and start looking at fundamentals and pricing as two separate autonomous things that are kind of related to the token. But at the end of the day, if you bought based on fundamentals and you didn't buy based on price, in other words, you didn't buy because it was FOMOing up, you're not kicking it because it's down. You'd only kick it if the fundamentals got messed up. The team left, the team quit, they're gone, they dumped on someone, there's a new team, you don't like them, they've changed something to tokenomics, they've changed something with the protocol, and it's a big deal, you don't like it. That would be a legitimate reason, in my opinion. Of course, I would still wait for the price to go up if you bought it up here before you sold, but the point I'm trying to make is you wouldn't be crying and upset and feel all of those fear-based emotions like we mentioned. Where is that? Where is that? I'm not going to be able to find it. Yeah. Increase in heart rate, breathing rate, blood sugar, perspiration. Probably other emotions I'm not mentioning here. I'd say like anger, aggression, sadness, regret. You look for someone else to blame because it's obviously got to be someone else's fault, right? A whole little thing about that is, I'll tell you this just from life experience, and if you take responsibility for your own actions, you'll grow as a person rather than looking for somebody else to blame. But you'll feel all these things if you FOMO'd in because, gosh darn, this is the one thing that's just going to keep going up. So you bought it right here because it at 1187 because, gosh darn it, it's going to go up to $8,000-$9,000 in a straight line. And we didn't manage expectations appropriately and properly. And I think whether you're looking for an entry point, and by the way, if you believe in something, I have people ask me, hey, I got 10 or 15 grand. Should I just go all in? I tell them, first of all, I don't give financial advice. I don't. Anybody who's thinking about writing me and asking me what they should do with their money, please don't, because I won't respond. I don't give financial advice. I don't give tax advice. I don't give legal advice. I don't give medical advice. I don't give any kind of advice. I only tell you what I'm doing, and I'll tell you what I would do. I would dollar cost average, and I would never go all in at any one point because in my experience, if you dollar cost average over a period of time, you're almost always going to get a better overall cost basis entry point. And of course, TradingView wants to lock me out now, but you're going to get an overall better basis entry point than you would if you just went all in at one point. Okay, so if you're looking at the chart and you got 10 grand and you happen to buy it right here at $900 and it's now down to 109, you're going to feel pretty upset. But if you bought here at 900, maybe you bought again, unfortunately, at 1,090, but then you waited and you got it at 829, and then you bought again at 573, and you bought again at 343, you're going to get a better overall entry point. Otherwise, you're kind of just hoping and praying you're going to hit the one low, and that's very extremely unrealistic. Even the best traders in the world can't hit lows and highs exactly. So the whole point here is expectations, and I think anything in life, whether it's our goals we're trying to achieve, it's our relationships with people, it's our faith, it's our health, a lot of things, setting the expectations. In other words, when you buy something, hey, this could go up 900% or it could go down 60%. But I'm buying because I did my research. This is what I believe. And frankly, if it goes down, I'd buy more. Everybody wanted to buy more OHM when it was at 1,300 or so dollars. Oh, I wish I would have bought it $200. Well, this is your opportunity to do that. If you were truly making that statement and buying based off of logic, fundamentals, and not FOMO, emotions, then you'd be buying. So this is good just to kind of check ourselves. I mean, I've been a victim of that as well, of just being like, hey, thinking incorrectly and being emotional and FOMOing into something and then getting, wrecked because it went down. And, I try to alter my expectations that, hey, I'm buying this because it does this, it does that. This is the team, this is what they're doing. That's like completely detaching yourself from the price. I had a business mentor that once said that when you're releasing products out in the marketplace, don't marry your products because they won't marry you back. In other words, be completely detached and unemotional. Otherwise you'll be in a situation like I've been, and I've seen other people in business. They release a couple products. They got one that is the greatest thing since sliced bread, and gosh darn it, it's going to work. But you find the data is telling you the marketplace doesn't like that product. They're telling you that it doesn't convert, it doesn't sell, it loses money. Meanwhile, you got these other basket of products over here that are doing very well. But you're so emotionally attached to this one, you'll continue throwing you'll continue throwing good money after bad. You'll waste good money onto a losing product because it's really the best thing ever when the marketplace is telling you it's not, and they're telling you the other ones are. Even though you don't like the other ones, it doesn't matter. So the point I'm trying to make with that is don't marry your investments. They will not marry you back. You can like an investment. You can be excited about it. But just keep that separation in your mind of your excitement and the expectations. You can be excited that something has just come out and you invested in it and you like what they're doing and here's why and you trust the team and all that. But just keep in mind, this could pull back 60%, 70%, whatever, when people take profits. Does that make it now all of a sudden a bad investment? Does that change all those things? The team, what they're doing, what they're not doing, the tech, all that? No, it doesn't change it at all. It's just that all of a sudden you saw red candles. I always say green candles, rocket ships, red candles, bloody knives. All of a sudden the product is fantastic when there's green candles, but when there's red candles, boy, it's the worst thing that ever came out and it's never going to recover. And then it turns right around again and all of a sudden it's the greatest thing again. And this cycle just keeps repeating and repeating and repeating because we can't separate our logical thinking from our emotions. And I just say set that expectation in advance. And I think it'll help all of us, not just when to buy, when to sell, what to invest in, but when we're researching something, how to objectively look at something, and how that it's okay that if you bought something and you thought it was great, that they made bad decisions and now it's not, and vice versa. And I think that'll help, not just us personally, but I think it'll help the community with the crypto, Twitter, and YouTube sort of toxicity that exists in the community. So with that said, that's my video, and we're going to be doing some interesting things. I keep saying I want to do a Q&A. I do want to do a Q&A. It's just super busy. There's a lot of stuff going on. I do want to do a tech series about tech-related security, things like encryption, things like authentication, wallet security, just, tips and things that I think, based on experience, I can explain in a way that maybe you didn't know. I have some experience in that area, and I think, the tech security is interconnected with the blockchain security because we all run this on our devices. We all run this on the internet. We all run this on networks, and they all behave basically the same, whether you're doing crypto, e-commerce, or anything else. So we're going to get into that as well. I'm going to do a Hector DAO deep dive. I am going to do a strong block tutorial, how to build your nodes, take profits, do all that kind of stuff. And I got some other fun things, some other projects that I'm speaking to, really, really promising looking projects that I want to bring to you guys that, I've not heard anywhere else. And I think you guys are going to be very excited. So until next time, guys, God bless. Take care.